Akash here with Daily Profit Cycle. It's Wednesday, July 21st, another weekly video market update. But first, some news. We have a new login site for premium members at digestpublishing.com. If you're a member of any of my or Gerardo's premium publications, weekly trading, monthly services, they are all now behind paywall at digestpublishing.com. You can see your portfolios there. You can see past issues there. You can see reports there and other exclusive tidbits like interviews, etc. So on to the update for the week, and I'm going to touch off on a update or an issue I put out to Foundational Profits earlier this month, talking about what would present a transition of the current bull market. Of course, I've been talking about all year really these sell-offs, monthly sell-offs we've been having, and how they're not the big one, and how it's not a rotation of the bull market yet because of specific things I've hit on from week to week, and premium members certainly know all the things, right? Volatility levels, bond yields, commodity prices, the level of the dollar, gold, stocks, etc. And so there were some big ones I was outlining a couple of weeks ago, namely bond yields, the U.S. 10-year, and volatility. And what we've had so far here in July is a breakdown of bond yields through their support at 1.3%, the U.S. 10-year yield specifically I'm talking about. And so that's a big one because of how big the bond market is. We had a big sell-off in stocks this week, sort of ringing the bell, signaling this transition at hand. And it's not sort of like a all or nothing thing is one of the messages I want to get across in this video. It's, not the end of the world, but it is, things are starting to change. And so you saw a pullback even in oil prices, for example, which I've been touting for a while, since last November or December, but not breaking down. And so that's what I mean by, it's not the end of the world. You see things like oil and copper still relatively strong despite the breakdown in bond yields. And so the other thing I'd point to is a rotation into leading sectors, whereas energy, like I just mentioned, and financials have been leading so far in 2021. Over the past month, you'll see that defensive sectors like real estate and utilities are starting to lead. So it's no wonder I had premium members, Foundational Profits members, rotating into real estate investment trust earlier this month. That's continued to do well in the past couple of weeks here, even as we've seen a couple of stumbling days for stocks. And so as the S&P marches back to highs, it's different sectors that's leading now. And so the other thing I was pointing to was volatility, and that's the chart that's on the screen here today. Going back a year, you see we had some big spikes last fall, September and October, but really volatility has been waning since late last year. And the level that I've told you about in the past is 30 on the VIX. And the spike that we saw here in July has been the biggest that we've seen in a couple of months. And so that's the other thing that portends a change in markets are at hand, or that this is starting to get a bit more serious. And so that's the market as I see it. The S&P continues to be near all-time highs, despite 1 point or whatever percent pullback it was this week, 1.345%, something like that. And so still in the market, but now rotating into different sectors. And gold, I would mention, is starting now to be more attractive, whereas I was telling you last fall that I was selling gold stocks as a sector because the rates were rising. Now, with those rates having penetrated their support at 1.3%, looking certainly at the big ones, the Wheatons, the Francos, the Kinrosses, et cetera, especially now because they're also paying better dividends because they've been producing for a year or more now at elevated gold prices north of $1,700. So gold has real support in the high 1700s. I think you'll see it gain strength along with things like real estate and utilities in this next phase of the market. And of course, if you're watching this video, you're interested in those sort of things, you can just own a passive index fund that tracks the S&P and not worry about what sectors are outperforming or underperforming or these transitions of the market. But you are watching this video, and so that's what you're interested in, and that's sort of what I do in Foundational Profits, which I've mentioned a couple of times. The sort of macro analysis and this quasi timing of sector rotations, etc., and then and invest in those via large cap funds and companies that reflect what I'm talking about: long real estate, long gold, whatever it is. And then drilling down further into commodity sectors which remain bullish. I mentioned oil and copper, but other commodities remain bullish as well as this inflation continues to take hold. And so I put out a video recently about one called Stargas that I've been speculating on via smaller companies, right? Which is what I do in another letter called Family Office Advantage. And Stargas is a rare commodity like rare earths or antimony, one that you don't hear much about, but that's vital for things that we're doing now and in the future as it relates to technology and energy. So I have a link up to the Stargas video up underneath this weekly video update. I hope you'll check that out and pay attention to the markets. Rotation is on. I'll be back at you next week with another video. Signing off for now, Nikaj.